Dharmesh, hi, good morning. Great to be speaking with you. Dharmesh, once again, volatility when it comes to West Asia news flow. Having said that, today we're a lot more resilient as opposed to some of our Asian peers or the NASDAQ fall as well, which is much AI driven. But how is it that investors should hedge against this volatility right now? Are there sectors which are sort of safe haven and less impacted? Should we see heightened volatility from here?
Yeah, good morning, Aisha, and good morning to all our viewers. And just one bit small correction. I am Dharmesh Kant and not Dharmesh Shah. So having said that, yeah, definitely. I mean, the volatility part has been there in the market for a couple of months since the West Asia war broke out. But the incremental volatility has come down significantly. I mean, look at in spite of so much missiles firing, even the Brent crude prices are hovering around 80 to 85 dollars a barrel, and that is a bit of a relief for India to say so. At the same time, I think the supply chain disruption this time around is not that high as it has been earlier. Incrementally, it is coming down. So market has adjusted to that factor. There are multiple routes which has been negotiated with the cost inbuilt into that. So that I think puts a flow to the market. For Nifty levels, I don't think we are likely to go below 23,500 or so levels. So any declines has to be bought into this, and this has to be looked into light with the kind of earnings report which we are seeing by most of the companies. The financials have reported excellent set of numbers. Automobiles will report very good set of numbers going by the numbers, quarterly updates which has come through on the vehicle sales. And so has been the case with most of the companies, even wire and cables and cement. Everybody is reporting a fine set of numbers. The price hikes they have taken have largely taken care of the input, price hikes. But the volume game is the one which is having the absolute EBITDA and profitability numbers higher than what the expectation was. So I mean, a lot of positivities are surrounding our market. And as far as AI trade is concerned, I shall have a point out there. If you look at June data, around $48 billion of selling was done in South Korea and Taiwan put together. Even India, we have a sell figure in the month of June. There was no buying happening. In July, somehow, I mean, there is $1.5 to $2 billion round of buying happening out there in the month of July. But to our sense, even if I don't sell, that's good enough for our country to have a base effect and keep on building on there. Because in India, you only have buyers, be it DIIs or retail or HNIs. So we all are on the buy side, and which has been supported by the fundamental numbers which have been coming through. So incrementally, we are positive on the market.
Dharmesh, hi. No, you're right. In the last 1 month, FIs have been net sellers to the tune of only 2,500 odd crores. From that point of view, we have been much better off on terms of foreign outflows as compared to Taiwan or Korea there. But coming to the earnings and how that going to impact some of the companies, Dharmesh. Next 2-3 days, means today, tomorrow, and on Saturday, you have 30 to 40% of Nifty weightage companies coming out with earnings. How do you position your portfolio going into that big event where you have the banking pack coming in, you have Reliance, you have two IT companies which are coming in today?
Yeah, good morning. I mean, see, the numbers as far as financials are concerned, they have been pretty good. And our expectation was in the last 2 months, we have been backing all the financials company. And the core reason was since that interest rate down cycle has come to a halt, and there had been a good, both asset and liability pricing has already taken place. So, and net interest income was the play out there where we expected a good growth, better than what the advances growth has been. And so has been reflective in this. Q1 earnings update. Look at Indian Bank or the Federal Bank, they have reported NIA growth of better than that of net advances growth. At the same time, other income growth has been supporting. So, I mean, all the banks, all the four, 5 banks which are reporting their numbers this weekend will surprise you on the upside. The growth last fiscal FY26 was in single digit on the PAT front. This time around, they are going to give you around 15 to 20% kind of a PAT growth, and that will take care of the full balancing year balance of the year for FY27 earnings growth. And that is where I think most people will go wrong on the EPS estimate for FY27, where mid single digit estimates was being, done. I think we are there for high single digit to even a low double digit kind of an EPS growth for FY27. As far as Reliance is concerned, we are not very confident about the earnings trajectory for Reliance because the circumstances which led to a drawdown in Q4 on the oil and refinery side will continue to be the same case in Q1 as well. And Jio has almost, plateaued. At the same time, retail is not showing so much growth, and there's a margin decline there because of the quick commerce foray they are entering into. So Reliance would be 7-8% kind of profitability growth, which would be muted, and that we are not taking into account. As far as IT companies are concerned, the best part for the IT companies is so far there has been no negative surprises. Whatever expectation was there on the lower end of the side, they have been delivering that kind of a numbers. And to our mind, IT is more of a quarter kind of a gameplay because the deal wins which are happening, eventually all the deal wins will migrate to AI ones. And AI ones are a short-term deal wins. It's like 1 quarter, 2 quarter kind of a deal wins, and you have to keep on relooking for newer wins. So annuity-based model is now taking out of the play. So that keeps AI more of a trading, I mean, IT more of a trading bet rather than a structural companies in the making. So AI, I mean, IT, we are staying away, but largely financials, metals, and your auto sector will keep the earnings up.
Well, the mobile phone manufacturing scheme, which got the go-ahead of the cabinet just yesterday, centers allocation of 62,500 crore rupees. What could be the beneficiaries? What all does it entail? Darshita is back with us with that insight.
Right. The government's latest cabinet push could become a major trigger for India's electronic manufacturing ecosystem. Now, the biggest announcement is a 62,500 crore mobile phone manufacturing scheme, which is aimed at making India a larger global manufacturing hub. And naturally, the companies already present in the electronic manufacturing services, or let's say EMS, are expected to be the first beneficiaries. And starting off first with Dixon Technologies, which is the India's largest EMS player, could see higher order inflows as the global smartphone brands expand their local production. Kaynes Technology, on the other hand, may benefit not just from assembling the electronics, but also from the increasing focus on the manufacturing high-value components. Moving on next, Sirma SGS Technologies and Avalon Technologies could gain as demand rises for precision electronics, PCB assembly and the components supplied to the global OEMs. Meanwhile, PG Electroplast could get an opportunity to expand its mobile manufacturing footprint, while Amber Enterprises, through its growing EMS business, stands to benefit from the government's localization push. But that's not all. The cabinet has also approved an expanded semiconductor mission with an outlay of 1.28 lakh crore rupee, reinforcing India's ambition to build a domestic chip ecosystem. While Tata Electronics remain as an unlisted player, listed companies like Kaynes Technology could benefit from higher demand for semiconductor and embedded electronics. Moving on next, CG Power is already investing in semiconductor assembly and testing, positioning itself well for the opportunity. And Moss Chip Technologies, which specializes in the chip design services, could see stronger demand as India's semiconductor ecosystem continues to scale. So yes, overall, these announcements strengthen the long-term investment case for companies across the electronics manufacturing and semiconductor value chain.
Okay, thank you so much for that, Darshita. What we'll do is slip in a very short break, come back, talk a little bit about what could well be movers, and MV could be one of those. Himadri speciality, again, the numbers were very strong. We'll speak about that and more on the other side. Stay with us.
Welcome back. You're watching The Market, and we still have with us Dharmesh. Dharmesh, one stock which has been, muted, it's Reliance. Its earnings are coming out on Friday. What's your take on that?
I mean, Reliance Industries, we have right now a neutral view for the short to medium term. Maybe for 2 year horizon, still some of parts valuation will work out in favor of Reliance Industries, particularly from the new energy division. If you look at oil to chemical segment, we expect a 4 to 5% kind of a drawdown in Q1 FY27 numbers. While to, I mean, gas is it's a very small segment as of now. It depends upon what kind of production you do. But as far as Geo platforms is concerned, Again, not much fireworks out there. ARPUs won't be higher. It has shown a lackluster kind of a growth for last 3 quarters. We expect the same this quarter, around 214 to 15 rupees of ARPU, which we have been building in. So 12-15% kind of a growth out there. Retail is one which was looking promising, but because of the foray into the quick commerce part, has been eating into the margins. So let's see how much margin dip this time around, but 7.5% margin is what we are building in. So that will again put down the profit growth to a lower segment. So new verticals like jewelry and garments and all, they have just started. So that will take time to fructify on the maturity side. So overall, it looks a promising company given like to the new energy segment, which the benefits will start trickling down by the fourth quarter of FY27, and FY28 will be one where meaningful contributions will come through. So till that time, it will be arrangement of muted stock. For FY27, earnings which we are penciling on the EPS front is around 7 to 8% kind of a growth in Reliance Industries. So that if you look at that with less than 10% kind of an ROE, the stock is still priced higher at around 20 times P multiple. So price action would be muted on Reliance Industries.
Rudra, what's your take on Reliance?
Definitely, I will avoid, and this stock is going nowhere unless you are a very long term investor and you want to buy it for a portfolio. That's a different story. But if you want to look at numbers very clearly on the chart, 1290 will be a very near term support for the stock. If it falls below 1290, yes, further lower levels can be seen. But again, upside is capped. You have multiple resistances at 1350. 1370, 1400. So even if this stock comes out with a good result or good numbers, you will face multiple hurdles till that 1370 to 1400 level. So as a short term momentum trade, I will definitely avoid this stock, and 1290 will be a strong support, and that will be the stop loss I will have if I am holding long in Reliance.
Dharmesh, let me come to you. Some of the life insurance names came out with numbers looking good.
Yeah, good morning, Darsh. Yeah, I mean, life insurance companies have reported a steady set of numbers this time around. Minor misses here and there, but ICICI Prudential came out with a better set of numbers. We expect the same continuity for most of the life insurance companies. Stock price, most of them has, good correction has happened in most of the companies. But we like in this space is LIC of India, Life Insurance Corporation of India. There is some traction we have already seen in the built up. There may be some stake sales also happening out there, so that profitability will also boost the stock price trajectory. But overall, if you look at it, I mean 15-16% kind of a new business growth they are doing. Their VNB margins are now going on the higher side, becoming comparable to private sector plays. Private sector plays from 30 to 29% kind of a VNB margin. They are coming down to 25-26. And Life Insurance Corporation of India has been catching up on the margin front. It's still the largest player, available at one-fourth of the price. If you look at price to embedded value, around 1.5 times it is available at. Most of the players are around 2 times price to embedded value. So a lot of comfort out there on the valuation side. The only overhang is the government of India holding when it comes for liquidation. But if you're a long-term play, I mean 3 to 5 years kind of a horizon, I think still it offers a very solid bet. For our fundamental portfolio, we have recommended this to our client with almost twice the price, around 1,000 rupees is our price target on Life Insurance Corporation of India.
Between
Wow.
ICICI Pru and HDFC Life, what would be your preference?
ICICI Pru would be our preference when compared to SDFC Life.
Interesting. HDB Financial also, I'm not sure if you had a chance to run the numbers, but the numbers looked extremely strong, right? Credit costs coming down and the commentary also remained strong. There was no change with regard to FY27 stance. Is there a view you have there, Dharmesh? Again, the stock is very close to IPO price. Done nothing in a year.
Yeah, again, see, the reason is why it is very close to IPO price. It came at a very high valuation multiple. So now, I mean, the numbers are actually, the time correction has happened. Numbers are coming strong. And I just had a glance through the numbers. They were pretty strong. But what we are expecting is this entire space to do very well this quarter as well. Last 2 to 3 quarters has been incrementally good, and this quarter should be again good. The entire FY27 we are looking at most of the companies to deliver a good set of numbers out there. On the housing finance side, I mean, what we have been banking on, what we have been liking, the best has been other housing finance, and the reason for that has been, it's not that what builders are doing for the affordable housing segment, but the type of book they have been maintaining. So 33% of the book is a self-constructed property. Balance 33% is more on a resale properties, and 27-28% is on the lap side of our book. So that's a very steady state. They're compounding on 20 to 25% is the AUM growth which we're expecting, with ROAs going above 4.2 to 4.4%. Even at 2.7 times price to valuation multiple 1 year forward, 600 target price. So we have an ICO on that, and this is a price target we have been recommending, subject to revision on the quarterly earnings update.
Of course. And last one, some of the power names, something like an MV photovoltaic. Again, the numbers were extremely strong when you're looking at it YOY. QOQ slightly softer, but maybe a correct way to look at this is YOY. It's very, very strong execution playing out. Do you have a view there, Dharmesh?
The power, I mean, the entire space is looking very exciting, but you have to be very selective, and it's a bottom-up approach. But MB photovoltaic, I have had a look at it closely on the numbers, so not right for me to comment on it right now. But what I can suggest is, if you are playing a power theme, don't go on the generation side. Their difficulties will be there, given the fact of the valuation comfort. But the transmission and distribution segment, especially on the HVDC side, that's the big play which is still to play out for next 2 3 years. Valuations may look expensive for the likes of, say, Hitachi, Siemens, GE, Vernova and all. But if you are buying on declines as a basket buy, I still think a lot of upside is there for next 2 or 3 years. So, just to give you a number, 33 gigawatt of HVDC commissioning has already been done. 33 gigawatt will more be done in next 2 to 3 years time frame. And 1 gigawatt is around 7,500 to 8,000 crores of an opportunity. So that's the size of opportunity these companies are looking at.
Any view on Angel One, Dharmesh? Rudra, I'll come to you in just a minute, but let me finish this rapid fire with Dharmesh.
Yeah, I mean, the numbers were pretty good, have giving light to the how the entire broking community has witnessed in Q1. So, I mean, on brokers, we don't give a view because of our competition aspect to that. But that segment looks pretty attractive. So, again, a basket buy would be recommended on wealth management companies, direct booking plays, and the infra providers like BSE, MCX. A good correction has happened. NSE IPO has been averted. But if you're looking at 1 to 2 years kind of perspective, these all are good value basket buys.
You also mentioned that among the lenders, HDB would be one of the ones you would look at. Jana Small Finance Bank, those numbers were also extremely strong, right? Dharmesh, 34% growth on NII, provisioning coming down sharply, 10% QOQ drop there. Loan book growth has come back and rebounded well. Margins have also expanded a little bit. Give us your sense, your take with regard to that one.
Yeah, numbers were excellent. I mean, in fact, all the microfinance focused small banks will give you a good sense of numbers, because they, in fact, the credit growth has picked up this quarter in the microfinance segment. But we are having a cautious stand on this. We are not going by what the numbers are reported for Q1, because El Nino is still playing out. So that is one factor, a cautionary factor which you have to keep in mind. And inflation is not coming down very early. So this will eventually eat into the profitability of, underprivileged segment of the society, and all the NBFCs and the small banks which have a focus to microfinance to this section of the community has to be taken with some caution. So don't buy now, wait for this El Nino environment to clear. As of now, what we understand is 15-16% kind of a swing has less happened. So that will definitely have some impact going forward. How government cushions them, I mean, Maharashtra government is already contemplating some of them. So let's wait and see. That's the call on the entire space where microfinance is a major the asset side of the companies.
Before I let you go, your top probably sector, stock, or segment in terms of a pick at this point of time, what would you go out and, or what are you going out and telling your clients to really go out and buy?
Yeah, sure. I mean, for last 2 or 3 months, we have been a consistent, having a buying bias on the entire banking space, public sector and private sector. And public sector, Bank of India is a topic out there. Private sector, we have been banking on Axis and IndusInd Bank. followed by automobiles. Hero MotoCorp, Bajaj Auto remains the top pick on the two-wheeler space, M&M on the four-wheeler space. That we have been liking. One contra theme which has come, which we have been liking, is the better space after the correction which we have seen. I think going forward for the balance of the year, it's a very nice opportunity to dabble into, say, a Hindalco, a JSW Steel, Vedanta Aluminium. Volume numbers were very good for the quarter gone by, and even if the prices remain where they are on the international market front, this is likely to do well. Defense, for 2 or 3 years perspective, the order books have been excellent. More is coming into the play. So there we have been a buyers, and there the topic has been Hindustan Aeronautics and Bharat Electronics.
Okay, Dharmesh, thank you so much for joining us and giving us that perspective this morning. We'll let you go.
Thank you so much.